Every day we're surrounded by signals. A traffic light tells us to stop. A smoke alarm tells us to leave. Your phone tells you someone's trying to reach you. A signal takes information and turns it into action. For the last 4 episodes, we've been collecting, storing, and analyzing market data, but none of those components can actually make a decision. Today, we build the signal engine, the part of our trading bot that finally answers one question: buy, sell, hold, or remain inactive. Welcome back to the course, Building a Professional Trading Bot from Scratch, a course for traders who are curious about automation and developers who are curious about trading. In the previous 4 episodes, we've built the foundations of our trading bot by creating 5 components, each with a single responsibility. We can now receive and store market data and transform that raw data into meaningful information through our indicators. Today, everything comes together. We finally reach the point where we can use that information to make trading decisions. In this episode, we're building the signal engine, the component that turns market information into actionable trading signals. We'll start by designing the architecture of our signal engine before implementing our first real trading strategy. We've chosen the popular 15-minute opening range breakout, or orb strategy, as our example. Not because it's the holy grail, but because it's simple enough to focus on the software architecture while still being a strategy many traders will recognize. You'll see how surprisingly little code is needed once the right foundations are in place. We'll generate our first buy and sell signals and then build a series of intelligent filters that prevent the bot from looking for trades when the market conditions simply aren't right. By the end of this episode, our trading bot will make its very first trading decision. So, let's begin. If you've been following this series, you've probably noticed that we haven't spent any time discussing trading strategies. That wasn't an accident. I'd like to think of the signal engine as the brain of our trading bot. And just like a human brain, it performs best when it isn't distracted by everything else that's going on around it. That's exactly why we spent the previous 4 episodes building the foundations. Now, the signal engine can focus on its one responsibility: turning that information into trading signals, without having to worry about where the data came from or how the indicators were calculated. Before we implement our first strategy, let's first design the signal engine and define exactly what its responsibilities are. At the heart of the signal engine are our ideas, our trading strategies. This is where market information is transformed into trading decisions. You can think of the signal engine as the decision-making center of our trading bot. On one side, market data and indicators flow in. On the other side, trading signals flow out. Its responsibility is simple: implement the trading logic and strategy rules that determine whether we should buy, sell, exit, or simply do nothing. To make those decisions, the signal engine has direct access to the market data store and the indicator store. It doesn't need to calculate indicators or process raw market data itself. That work has already been done by dedicated components. This allows the signal engine to focus entirely on making clean, objective decisions. Just as importantly, the signal engine knows nothing about orders, positions, or execution. It simply identifies trading opportunities and returns a signal. That separation of responsibilities gives us a huge advantage. If we want to test a completely different strategy, we don't need to change the rest of the trading bot. We simply replace the trading logic inside the signal engine, and everything else continues to work exactly as before. Let's have a look at the code. As expected, the signal engine receives the market data store and the indicator store. These are the 2 sources of information it needs to make its decisions. We've also added a configuration object. Every trading strategy comes with its own set of parameters. Are we using a 20-period moving average or a 50-period moving average? Are we analyzing 1-minute candles, 5-minute candles, or hourly candles? Rather than hard-coding these values into our strategy, we keep them in a separate configuration. That makes the strategy much easier to test, tune, and maintain. Looking further ahead, this configuration doesn't even have to come from a file. We could build a dashboard that communicates directly with the trading bot, allowing us to adjust strategy parameters without changing a single line of code. That's something we might explore in a future episode. The signal engine exposes just 3 functions. First, it generates entry signals. Second, it generates exit signals. And finally, it decides whether the strategy should even be active in the current market conditions. That last function, is active, is probably the most underrated one. Imagine your trading bot is running 24 hours a day, monitoring 20 different symbols with 20 different strategies. Not every strategy should be looking for trades all the time. Many strategies only work during specific trading sessions, under certain volatility conditions, or when the market behaves in a particular way. Is active acts as a gatekeeper. Before we spend time evaluating the trading logic, we first ask a simple question. Should this strategy even be looking for opportunities right now? If the answer is no, we simply skip the signal generation altogether. Let's implement our first real trading strategy. For this episode, we've chosen one of the most well-known intraday strategies, the 15-minute Opening Range Breakout, or ORB. There are many different variations of the ORB strategy, and traders still debate the best way to trade it. Some use different opening ranges, others apply additional filters or confirmation signals. But they all share one common idea. Define an opening range and watch how price behaves around it. In our implementation, the opening range is simply the first 15 minutes of the trading session. Since we're using 5-minute candles, that corresponds to the first 3 candles after the market opens. We take the highest high and the lowest low of those 3 candles to define our opening range. From that point on, every completed 5-minute candle is compared against these 2 levels. If a candle closes above the opening range high, we generate a buy signal. If a candle closes below the opening range low, we generate a sell signal. The important word here is closes. We don't react to every price movement or every wick that briefly moves outside the range. We wait for a full 5-minute candle to close beyond the opening range. That gives us an objective and repeatable rule that our software can implement consistently. In this example, the 5th candle, representing the period from 20 minutes to 25 minutes after the open, is the first candle to close above the opening range high. At that moment, the signal engine generates its buy signal. Now let's translate our trading idea into software. Every time a new 5-minute candle closes, the signal engine follows exactly this sequence of steps. The first question it asks is whether the strategy is currently active. For our ORB strategy, the answer will usually be no. The trading bot may be running all day, but the 15-minute opening range breakout is only interested in a relatively short window after the market opens. Most of the day, the signal engine will simply return no signal without evaluating the strategy at all. If the strategy is active, we retrieve 3 pieces of information: the latest candle's closing price, the opening range high, and the opening range low. From there, the trading logic is remarkably simple. First, we check whether the candle closed above the opening range high. If it did, we generate a buy signal. If not, we perform one final check. Did the candle close below the opening range low? If so, we generate a sell signal. If neither condition is met, there simply isn't a trading opportunity yet. We return no signal and wait for the next 5-minute candle to close before repeating the entire process. And here is our trading signal. This is it. 4 episodes of architecture, all culminating in fewer than 20 lines of trading logic. And that's exactly the point of good software design, and exactly what this course is all about. The complexity hasn't disappeared. It's simply been moved into dedicated components, each with a single responsibility. The signal engine doesn't collect market data. It doesn't calculate indicators. It doesn't know anything about orders or positions. It simply retrieves the information it needs, applies the strategy rules, and returns a trading signal. Of course, in practice, we don't want to evaluate our trading logic on every single candle. First, we need to decide whether the strategy should even be looking for opportunities. That's exactly what is active does. The first check is time. Most opening range breakout strategies are only effective during the first hour or 2 after the market opens, so we simply verify that we're inside the strategy's trading window. Next, we can filter by trading day. Since orb strategies are easy to backtest, we may discover that certain symbols perform well on Mondays and Fridays, but consistently underperform on other days. We also validate the opening range itself. If it's unusually narrow or unusually wide, today's market may not be suitable for this strategy, so we simply skip it. Finally, we consider market conditions. If the pre-market has already been exceptionally volatile, or if a major macro event is approaching, we can temporarily deactivate the strategy and wait for more favorable conditions. The important point is that none of these functions generate trading signals. They simply decide whether today's market resembles the environment this strategy was designed for. The orb strategy itself has very little exit logic. In our implementation, we simply exit at the end of the trading session. More sophisticated strategies may exit on an indicator, a reversal signal, or even immediately reverse from a long position into a short position. Notice that stop losses and trailing stops are not handled here. Those belong to the risk manager, which we'll build later in the series. The signal engine simply answers one question. Should I enter? Should I exit? Everything that happens after that is somebody else's responsibility. And that's a wrap for episode 5. Today we designed the signal engine, giving it a single responsibility, just like every other component we've built so far: generating trading signals. We also saw that, once the right architecture is in place, implementing a trading strategy can be remarkably simple. The complexity hasn't disappeared. It has simply been moved into the components where it belongs. In the next episode, we'll build the execution engine. So far, our trading bot has been receiving information from the broker. In episode 6, we'll complete that loop by sending instructions back to the broker and placing our first orders. We'll also handle the broker callbacks for order updates, executions, and positions, allowing our trading bot to keep track of everything that happens after a signal is generated. Until then, thanks for watching, and I'll see you in episode 6.